Hello, warm welcome to the first worldwide exchange of the week. We kick off with data out of the Eurozone. The final composite PMI unchanged from the flash estimate, 52.1 in December. It's 51.7 in November. So Eurozone companies as a whole enjoying a fairly strong finish to 2013. The survey showing new orders in at the fastest pace since June 2011. The employment index hitting the 50 mark for the first time in 2 years. That means employers are now hiring as many people as they are laying off. But France is still the laggard, 47.4 on the services figure is what we were having in the flash, which seems to have been repeated. So there's concerns about the divergence, but a better number out of Spain as well. And euro dollar on the back of that, just up at a session high at 136.01, away from that near 139 level we hit a couple of weeks ago, which was the 26 9-month high. Let's get some thoughts from Yannick, Naud, portfolio manager at Sturgeon Capital. Yannick, Happy New Year.
Happy New Year to you.
Nice to see you. Overall, the composite PMI is going in the right way, but there's this massive divergence between Germany on the one hand particularly and France.
Yeah, I mean, in 2012, 2013, there were diversion between Southern Europe and or peripheral Europe and core Europe. Now it's really France and for a certain respect Italy that are underperforming. I mean, they're underperforming not only on PMI today, but the GDP was down 0.1%. And looking inside the GDP, it was more import, less export, less investment, more public spending. So the worst combination you want.
And France and Italy are 40% of Eurozone GDP.
Yes, I mean, the key is we had seen weakness in French economic data for all 2013. It's a well-known thing. We know that the President Hollande is unlikely to do structural reform this year, because this year we have local election followed by European election in May, and the socialists are not supposed to do very well.
I was going to say, how much of a headwind that maybe isn't priced in yet for investors into the Eurozone are these elections going to be if Marine Le Pen gets a big showing and gets a solid block in European parliamentary elections as well?
What we could see...
They're an anti-Euro party, right?
There is now in Europe, a bit like the Tea Party in the States, there is anti-establishment party across Europe. Whatever it's a far-right like Marine Le Pen, anti-European like UKIP, or Five-Star Movement, which is really anti-establishment and anti-European party. If we see the development of those parties, which don't want any compromise and want only a very, very strong solution, it could make a policy decision much more difficult within Europe.
All right, that's the Eurozone PMIs. We've also seen growth in China's services sector slowing down sharply last month. HSBC's market December services PMI down at 50.9, the lowest level in more than 2 years, and it follows the official reading of 54.6, a 4-month low. Joining us for more, Stephen Sun, head of China equity strategy at HSBC, along with